Hey guys, Jared Wesley here of Live Traders, and I'm back for another trade review. Although this past week wasn't my best week, and to be honest, this month in particular hasn't been my best month, I thought it would be valuable to go over a few trades that I took this past week. Now, I'm going to go over 3 different trades I took. In actuality, it's 5 trades because I implemented the 84% rule on 2 of the 3 trades I took because those 2 trades stopped out. I took the 84% rule play and they eventually worked. So for those of you that haven't checked out my video on the 84% play, you might want to check that out. Now remember, you need to back test your own trades, your own ideas to see if it's applicable to you and to see if it's even valuable to do. But for me, the 84% play has been a very positive thing for my trading. Basically, for those of you who haven't seen the video, it's when something stops out or a trade loses for me, I look to re-enter that trade at the original entry I took. There's a little more to it than that, but go check the video out to learn more about it. So this particular week, guys, like I said, it was a little bit choppy. And before I get into the trades, just to understand for a second, you know, when you think about a 12-month year, okay, you're going to likely have 3 really good months. I mean, months that you just crush it, kill it, and you can do no wrong on those months, okay? Then you're going to have 3 months where kind of the opposite happens. You really struggle. You can do no right on those months. Now, remember, those months aren't always going to be terrible months. They're just not going to be as good as a normal month. Well, that's what's happening to me here in February so far. It hasn't been a great month, but you know what? It happens. So 3 really good months, 3 not so good months, and then you can imagine the other 6 months are pretty normal, pretty average. So just kind of expect your year to go that way, the ebb and flow. And there's no necessarily, you know, rhyme or reason to it when those good and bad months happen. It's not, some people say, oh, it's the summertime that the bad months happen. Not necessarily, okay? It can happen at any time. February, historically, for me, traditionally, has been a very good month. This month, not so much. So things happen every once in a while. So anyway, let's get into these trades, guys. We're going to talk about Verizon, XPEV, and BIDU today. So the first one I want to talk about is Verizon, okay? And this one happened, I believe it was last Tuesday or Wednesday. This was an unbelievably nice gap on Verizon, okay? You can see on the screen there, I mean, we're gapping over a doji bar plus like 3 or 4 red bars and a pivot. So this was a really good gap. Now, we did have a little bit of a 200 period moving average above us, but it was so far above us that it really didn't matter on this particular play. So I really like the gap on Verizon. It was my favorite gap of that day. And it's something that everybody who was looking for gaps, dollar gainers that day should have been looking for and looking at, okay? So I look at this trade, and it's one that you could potentially be really aggressive with. Now, is it level 1? No, but it's a really high quality level 2 gap, low level 1 high. So what that means to those of you who have taken professional trading strategies is the higher the level of gap, the more aggressive we're able to be with our entries. So I was pretty aggressive with my first trade on Verizon. So I ended up getting in on basically a 2-minute high. It was like a miniature turnaround bar, but an aggressive one. I want that to be clear, a very aggressive one. So I get in at 56.18 with a stop loss at 55.85, okay? And it kind of clicks over that area and goes all the way up to about 56.25, not very much. It was about a 30-cent stop, so it was about a quarter of an R. Now, in the pre-market talk, I said, you know, I really prefer this over 56.50, but every once in a while, your emotions get the best of you. The gap was so good. It was showing relative strength to the market. I mean, there's a lot of things to really like about it. So I jumped in and basically, boom. I mean, it didn't happen immediately, but it didn't take that long either, and Verizon stopped me out. And it's funny because in the video, you'll see, I make the comment, oh, this thing's probably going to go higher for the rest of the day. Well, sure enough, it did. But this is where the 84% play comes in, okay? I wasn't just going to sit there and let this thing stop me out and then go, oh, that's done. You got me. You got the best of me. The gap was too good for that, guys. So don't lose focus, okay? Stay focused, all right? So ultimately, Verizon put in a double bottom retest, okay? Now, I have 2 choices here. All right, I can wait for the 84% play to trigger, which it ultimately did later on, or I can still look for other patterns, other entries on the Verizon chart. So in this particular case, I'm looking at the 1 and the 2-minute chart, and we see a double bottom retest. So I got back into Verizon a little bit earlier this time. So this time, because of the double bottom retest, I get in at 55.85 with a stop at 55.60. So now I have a 25-cent stop. Now, for those of you that haven't been watching me very long, I used to shoot for 2-to-1 targets, but recently I've been a little bit more scalpy. So basically I'm shooting for 1-to-1 targets. Now I know you're thinking, that's crazy. It's not as crazy as it sounds because I raise my stop loss very, very quickly and I rarely take full stop outs. Verizon happened to be one of those full stop outs. So anyway, Verizon triggers at 55.85 on a beautiful double bottom retest buy setup right out of the textbook. We get in it. I should have added on the 84% play. I really should have, but I didn't. So long story short, this thing ultimately went higher. It hit my target. I got my $1,000 that I lost back. I made a little bit of money on it, not a whole lot. And this thing actually ended up going much, much higher. So it ended up being break even on the trade. But the good news was I got my money back on it. Okay, now again, was the first trade a little aggressive? It probably was a little bit aggressive. But at the same time, that gap was really, really nice. So I thought it was worth the shot. Now, on to the next position, guys. That was XPEV, okay? Now, the difference here is, for example, the Verizon gap was incredible. It was really good. The XPEV gap was, it was pretty mediocre, to be honest with you. It was gapping under a bottoming tail bar, which is nice, okay? But it had already been down about a day and a half to 2 days. So it wasn't a new move lower on XPEV. So there was a lot less shock value in it, even though it was gapping under a bottoming tail. And you can see it on the screen, the bottoming tail that it's gapping under. And for those of you guys, you don't have to just use a daily chart. You can also use a 60-minute chart to get a little bit of a better look inside of the daily chart. Sometimes you see some things in there that you wouldn't normally see on the daily. So it gaps under the daily bar there, okay? And then you sit and go, okay, but there's not a ton of room here, right? There's room down to about $40.60. And you're like, well, we're sitting at $41.50 to $42. That doesn't give us a lot of room to trade with, 50 cents, perhaps even $1. So I knew if we were to take XPEV, we're going to have to do it with a relatively tight stop loss, because there wasn't a lot of room to play with this, okay? So it had some relative weakness to the market, and then it set up this really pretty, like, 1 minute consolidation, okay? It was a little bit overlappy. It wasn't super, super tight, but it was really pushing down, meaning the sellers were making an impression on the buyers, and it was staying near the lows of the day. So on the 1 minute and the 2 minute, it looked really good. It was kind of sitting in that 41.50 to 41.60 area, and the high of the day was 42.07. All right, so I got in this just above the half number at 41.51, even though the low of the day was like 41.53. Now, why am I telling you this? I'm saying this because most of the time, guys, if there's a half or a whole number, we like to wait for that half or whole number to be broken. But here's the rub. If we wait for that half number or whole number to be broken, we might not get filled, right? There's a lot of pressure in those areas, okay? So if you're looking to get under, say, 41.50, there's a big tug of war there. And when it finally breaks, they usually tumble. If you're looking, for example, to go long, say, over 42, there's a lot of buyers and sellers at 42. And when they break 42, they usually rip. Okay, so I typically anticipate my entries, even if it's only by 1 or 2 pennies. Okay, and you're going to see here in a minute on BIDU, it bites me, but we'll get to that in a second. So on XPEV, I get in at 41.51. Guess what? It never breaks 41.50. Well, it ultimately breaks, but it doesn't break 41.50 for a while. I get in, and honestly, it starts going against me and against me and against me and against me, and it almost stops me out. My stop's at 42.08, I believe, somewhere in that area, and this thing goes like 42.01, 42.02, and I'm thinking, oh, that's it. You're going to stop out on this thing. It doesn't. It goes up to that area, gets into that resistance point, and comes all the way back down, and eventually breaks 41.50 and goes to my target, which is right around 40.90, and I ended up making about $1,000 on this trade. So the pattern was good, the gap was mediocre, but the lesson learned here is, yes, you can anticipate your entries, but understand, from time to time, occasionally, you might get tagged, and I call them anticipation stop outs, because you anticipated the entry, and it never triggered, and you stop out. Now, that only happens for me statistically about 3% of the time. And for me, 3% is worth it. Okay, those extra couple stop outs are worth it, because if you don't anticipate, especially when you have 5,000, 10,000 shares of something, guess what? You might not get filled. Okay, so anticipating is a valuable tool. I would not recommend it for new traders though. Okay, so on to the last trade I took of the week. This was on Friday. It was on BIDU, BIDU. And we can see here on the 60-minute chart, this was a very, very strong stock. Was this an unbelievably great gap or a really good daily chart? Not particularly. It was decent, but it wasn't incredible. I went mainly with strength on this. It was gapping up. There was a little bit of overhead supply with regard to the gap fill on this. But all in all, it was a pretty good gap on an otherwise extremely strong stock. All right, so I'm watching BIDU. It gaps up. It puts in a really nice first wide range green bar with a bottoming tail, okay, on the 2-minute time frame. And then the second bar starts to do what? Starts to consolidate in that upper 50% range. And I'm like, oh man, we're going to get a 3-bar play on this thing. And it's going to be beautiful because BIDU's been like rocket fuel lately, okay? So what do? Well, the third bar starts to form and I get into BIDU. And remember I talked about XPEV anticipating my entry? Well, I anticipated my entry. So the proper entry was right around $310 and I think it was 25 or 30 cents. I get in at $310.10. I'm like, all right, it's got a big spread. I want to make sure I get filled because we've all seen it before, right? You wait, and boom, it just blows right through you, okay? Or if you use a market order, you get filled 50, 60, 70 cents late. I didn't want that to happen with BIDU. Well, what do you think happened? It triggers my entry, okay? And then it doesn't trigger the 2-minute 3-bar play. So you're sitting there like, okay, well, it's going to trigger. Just be patient. This is a great pattern, decent gap. You know, everything's going to be fine. So it comes down, and this is the part that really hurt, okay? It comes down. It tags me by 20 cents. Now, guys, just to be clear, this is like a $5 stop loss. So to be tagged by 10 or 20 cents on a $5 stop loss really hurts, right? I had my stop loss at like 305.40. The stock goes down to like 305.25. And what do you think it does? It comes right back up, okay? So what did I do? I 84%ed this, but this time I did a better job than I did on Verizon, right? Verizon, I got back in at an early spot and I didn't add on the 84% rule. BIDU I did. All right, so I got in earlier on BIDU on the pullback. You'll see the 2-minute buy setup. I got in on the buy setup around 308 with a $3 stop loss, but only a half lot, okay? And then when BIDU came back to my original entry of 310.10, I added back my shares and got full. Okay, and BIDU, honestly, it chopped around for a little bit. There was a little bit of overhead supply in the 311, 312 area on the 15-minute chart, but it ultimately got through that area, and guys, BIDU went to like $330, okay? Now, the reason I'm commenting on that is I got my 1R back. So I lost an R on BIDU early on, and I got my money back. So I only made $1.66 on BIDU, which wasn't great, okay? And some of you are thinking, well, that's terrible, Jared. The stock went $20, $30, not 30, but $20 higher. Well, here's the thing, guys, all right? Trade management is a very personal thing. Some people are very patient traders. Some people are not very patient traders, okay? You have to determine what type of trader that you are, okay? I am not a patient trader, hence my name Scoutmaster on Instagram and Scoutmaster on Twitter, etc., and so forth, all right? So I like to get in and get out. I don't take a lot of full stop outs. This week I happened to take a few because they are anticipation stops, most of them. All right, but I got back in and got my money back. So if you're the type of person that's patient and you hold for 15-minute pivots or bar by bar, that's fine. I have no problem with that. But here's the one rule. Whatever it is that you do, however you manage your trades, do it the same way every time. Do not put some subjectivity to your trades like, well, you know, the market's tanking right now. I need to get out of this before the stock goes against me. Stick to it. If it's a 5-minute bar by bar, you do a 5-minute bar by bar, no matter what. If you're doing, you know, I don't know, 15-minute pivots, you stick to 15-minute pivots no matter what. You don't just on the fly make a change. Now, if you want to back test something and then make a change, that's different. Okay, but just don't on the fly do something. And same with the 84% rule. Don't just take my word for it. Go back test it. Guys, you're running a business, a very, very serious business at that. So take it that way and treat it that way, okay? Don't be like those AMC, GME, GameStop, you know, Wall Street bets people. Those are gamblers. If you want to be around, I've been doing this 15 years. If you want to be around, okay, you need to have rules and you need to be consistent and you need to be disciplined in your approach to follow those rules, okay? So don't beat around the bush. Put your plan on paper, okay? Because the weakest ink is stronger than the best memory, I promise you. Put it on paper. Then go out and apply it to the real markets. If you see some inefficiencies, go make some changes, but do so with empirical data. All right, do so because your spreadsheet says, hey, you could be better over here if you did this. Don't do it because your emotions are that way. Guys, human beings make a lot of mistakes because of emotions. We're seeing that in this great country right now. Emotions are making people do crazy things. Don't bring that into your trading, okay? Use statistics, use empirical data. All right, so anyway, I hope you guys enjoyed this review on BIDU, on XPEV, as well as Verizon. If you like this video, please click that like button, smash the subscribe button, and always don't forget those click notifications, right, that little bell, all right? I'm Jared Wesley of Live Traders. I'll see you guys again soon.